RIN TV coverage of the 2015 European Insurance Forum is brought to you by the Dublin International Insurance and Management Association. So, are Irish insurers ready for Solvency II? With implementation of the EU directive set for January of 2016, we spoke with Sylvia Cronin during the 2015 European Insurance Forum to get some answers. She is Director of Insurance Supervision at the Central Bank of Ireland and a member of the EIOPA Board of Supervisors. Here's what she had to say.
The insurance executives in Ireland have been looking at Solvency II over the past probably 15 years, and it's been like the marathon of marathons. So there's been a lot of anxiety initially, though people were very excited about the coming of Solvency II. Now there is quite a lot of trepidation because a lot of the systems that companies have in place, they're just not capable and not ready for Solvency II. So there is a lot of anxiety in relation to its coming, anxiety in relation to the readiness, and also an anxiety about the changes because it is risk-based, and the ensuring that that culture is instilled, particularly within the board members of companies, is quite a challenge for a lot of insurance entities. The issue in the area of data and reporting relates to the readiness of companies in their systems and in their ability to transfer the data requirements into the regulator and then onto EIOPA. At the moment, a lot of companies have legacy systems because insurance companies tend to have been around for quite some time. So those legacy systems haven't been capable of adapting to the new requirements. New systems have been required to be implemented, and entities then have to put in place this XBRL rules for data validation. The data will only go through when all rules have been passed. And regrettably, in a number of companies, whilst they may have got through 90%, because they haven't got through 100%, there hasn't been that ability to be able to test whether it's successful or not. So there's a long way to go in relation to the data, ensuring that the data transfers correctly. And then there's, I suppose we've got interim reporting, which is in May of this year, again in January next year, and then we've got full implementation of the full year end 2015 in May 2016. So there's a lot of work to be done, particularly in the area of IT. Issues in relation to implementation of Solvency II include the change in the investment environment. Before, under Solvency I, there were strict rules in place, which of course everybody complained about. They didn't like the limits, but at least there were rules there that you comply with. Now it is completely changed, and it is based on the prudent person principle. So companies have to adapt to that new change on a risk-based analysis, and there has to be evidence that the decisions that are being made are appropriately documented and ensure that from both the company and the regulator perspective that we're comfortable with what the decision has been. The other area would be in the internal model environment in relation to the capability of ensuring that the internal model application, formal application, is complete and is in place before the end of the year. A lot of companies in their development of the internal model have encountered some issues which they're galloping at the moment to ensure the completion before the implementation date. And I suppose the third area is the area of group supervision that companies need to be aware of. In group supervision, there have been a number of changes. So groups before operated, I won't say individually, but certainly working together as a group, and consistency and convergence of approach at a group level has been developed a lot further in Solvency II. Ireland, we are working well, we're developing well in terms of our implementation. We've been working with our stakeholders. We have a very comprehensive implementation plan. We've worked with our stakeholders, and I suppose the one thing I will say is we had Gabriele Bernardino over at a recent industry event here in Dublin, and Gabrielle commended Ireland on being the most successful in terms of our communication plan. So I have to say the Irish are pretty good at talking, so that's one thing, we're good at communicating. So when I look at Solvency II and I look at the different pillars, I think we're probably well advanced in relation to Pillar 2 and the area of governance, and Pillar 1 and 2 we're certainly ahead of the game. In relation to Pillar 3, yes, we have a bit to go, but I certainly feel we're well on track and we will achieve it.
For more of our coverage of the 2015 European Insurance Forum, visit the DEMA website or the special 2015 EIF channel in the RIN TV On Demand library.